Hi there, I'm Isaac, and today we're going to walk through a review of 2021 for me. So just as a bit of an introduction, there are a couple of things that happened this year that really shaped my year. These actually have nothing to do with P&L, but more like interactions with people who I trust or take guidance from. So in a conversation with my mentor, we were discussing, everything I was struggling with, and this was maybe a couple of months ago. And he said, 99% of your problem is just yourself. And in that, he was talking about my psychology. It wasn't that I didn't understand the markets. It was that I was letting myself, something getting in the way of my trading results. And so, kind of following from that, I'm not sure how the others have reviewed their year, but you'll see that mine is basically going to follow this, is that it's actually not really looking at my performance in terms of money, because I think it's not really my issue, and so we're going to direct it that way. Now, I just wanted to mention two really pivotal moments that shaped my year, and really that turned everything around. Sometimes I suppose the year is like a bit of a V reversal, right? And both of these moments kind of occurred down here. And at that stage, you're thinking, okay, I really need to find some way to turn this around. And so the two pivotal moments for me, the first one was that in a discussion of my results with my mentor, he said, look, it looks like you have no edges. These aren't direct quotes, but this is pretty much what he said. And this was, in the context of my performance. And I had just got onto so many bad runs where I just couldn't even get a winner for a whole week or something like that, things like this. And it was just okay, I started off doing okay when I went live, and then it's just sort of kind of collapsed from there. And so that really hurt, obviously, to be told that you have no edge, and you think, all right, how much more of a career have I got here if I can't figure this out? And so that was one sort of kick up the butt. The second one was when my partner said that I'm down a lot of the time and that I don't really laugh and smile anymore. And then I realized that actually I was letting trading get in the way of my own life outside of this. But then also, I think because if it's impacting it like that, then it's actually probably like a negative feedback loop, and it's probably impacting at work. If you're a bit unhappy whether you realize it or not, and you're tired, and things, how are you going to make good decisions? How are you going to have confidence during your day? So I think both of those two were really big for me, and that was, a big part of listening, accepting, and not fighting the feedback that I was being given, and then thinking, okay, what have I got to do to turn around, which I suppose is, a difficult thing, but, was what I had to do. So that's what my year is like, a V reversal. So just some kind of not bullet points, but basically what I've done is just, break down the year into what I did well and what I can improve. So if we just go through some of these key things, the first one is that, and these are not really in any order of importance, but the top one being, developed concepts to simplify my interpretation of the market. So what I mean there is that, you might see particular patterns or particular features that go on, and then I've just sort of lumped those features in and say, when I see things like this, then my interpretation of this market is going to be X, and one example of that, as I came up with this term that I call an indecision market. And so there was one of those really recently with oil. So after the Omicron variant sort of appeared and we had the big risk off, the markets then bid back, pretty much back, or bid back most of the way. And then they went into this 9-day range, and in that range, they had overlapping value, volatility died, volumes died, and in those ranges, I then start to call an indecision market, because the indecision part's or indecision balance just helps me recognize the fact that the market doesn't really have a bias, and so then that stops me from trying to get too directional or anything like that, and makes me really think before I get involved in any kind of breakout idea. So eventually balances break, but a good balance to break, for example, would be a balance on a strong day. You get a bit of a flag or something like that, and then the market moves higher, which creates a profile like this, which you could say could look like what an indecision market looked like before it broke, but just the context is different. So anyway, that's an example. Then reduce my technical preparation to actionable ideas. So what I'm getting at here is at the start of the year, I just looked at all the information in the market and I said, okay, how do I make sense of this? And then I came up with, okay, what was likely to happen? But I sort of went information to an idea, but I didn't go any deeper than. And now I'm like spending less time kind of making sense of the information and trying to go a lot more like kind of concise and just saying, well, okay, cool, this is what I think is happening. These are the features, this is the level it should hold. This is the level it should break. This is where I want to see some kind of interaction, and really getting into a detail where I'm kind of like actually starting to commit to that idea and say, well, where do I want to be involved in those sort of things? How can I shape a trade? And so that's allowed me to go into them, because what happens otherwise is if you go in with like kind of like a fluffier idea, as much as you've developed the idea, if it hasn't gone past the idea stage, you're thinking about, well, not only the idea and confirming it in the moment, but you're also then thinking about trading it, and you've got just too many things going on in your head at once. So that reduction, so I say reducing it to something simple was key. Then I developed like a one-touch routine, and this came after that conversation with my partner. I thought, okay, I need to reduce some of the time at work. And that was just sort of like, the way that I maybe do my prep or like write my weekly calendar. How can I make sure I'm not writing the calendar and then adding, and then writing a daily calendar? I just have started putting dates and etc. and just taking notes on my weekly plan that I print out, and that way I'm not writing stuff down multiple times. Just anything like that just reduces the amount of like doubling up, and even changed the way I debrief a little bit. Then I was open and honest about my trading rather than trying to save face. So one thing that I really wanted to do when I got into this was to make sure I didn't have I wanted to try and reduce the amount of the time where I felt like I had to be right. So if I do something wrong, I'm just going to go, well, I thought this, I did this about it, and I was wrong, and let that be that. Because I think the moment you don't approach it like that, and you start to like defend yourself or something like that, then your ability to learn and grow really decreases. So yeah, that I think is really important. Then towards the end of the year, I found a bit of a balance between sort of work, health, and putting health, just like, things like exercise, eating well, and personal life. I mean, to be honest, I've eaten well probably the whole time I've been here, but that helps when you go out with a dietitian. And yeah, so anyway, so that was good. Started having more fun and energy and etc. So I think that was important. Life's not only about trading, even though we all love it. And then I sort of started also to develop awareness of bad runs, and I've really like reduced the amount of bad runs these last few months. Like they haven't kind of like gone on and become like a never-ending thing. I've been able to kind of cap them a lot faster now, and then rediscovered my edge, just to bring back to what my mentor was saying to me. So it's stuff I can improve, recognize and break negative feedback loops in the moment. So this one is key, and actually is what most of the rest of this is going to be about. That won't make much sense right now, but it's okay. Just forget about it and we'll come back to that. Then the next one underneath, reduce my news, event, fundamental prep like I do my technicals. So I said that I really took the idea and then started to kind of like commit to it by writing, areas where I might want to be involved, where I'll be wrong, etc. And I need to do the same thing with news prep and be like, okay, what do I need to hear or see or whatever it is or read, to commit to a fundamental trade. And so if I can do that and then put in targets and stuff like that, then when I get in, there's a lot less thinking, and I can be a lot more clear about just reading the market rather than trying to read the market and also think about my idea. So simplicity is key. Then scenario selection based on intraday information. I actually am not very good at kind of trading intraday unless I go in with a really strong idea before it that I like really deeply believe in. I tend to not do that great. Sometimes I do, but generally it's if like my edge is if the information's so overwhelmingly strong, then go on to the day and I'm really just looking for confirmation of that or not. But obviously that means there's a few days, maybe 2 days a week or something where I've really got something going on, and it would be nice to be able to find a bit more edge in other places. So that's something I want to work on. And then just about refreshing is obviously because this is developing information, I need to go back and update that throughout the day. And then lean on information over price confirmation. So that's, like obviously if you want the market to go up, it's really nice to see the market going through a high and to see some more interaction, but that's not always the best way to trade. And actually it's really the best way to trade. In some market conditions it is, but but there's a lot more to it than that. And I think just trying to get more depth over that, if the market's going to go, I want it to go up, and the market's on a rotation down, is getting absorbed at the low, and every time it goes down there, someone's buying it. Well, that's kind of good information confirmation in a way, rather than price confirmation. Or if the market's struggling to go up, and then some news comes out that's a little bit bearish, and then the market was already starting to come hinting at, because it was struggling, that it was starting to get bearish, then those sort of things, that's like information confirmation rather than price confirmation. So it's almost like trusting that from the information that the price movement will follow. So then you continue to maintain a balanced lifestyle. It's not really something I can improve, I don't think, because I think it's gone quite well now, but just about trying to maintain it in a way that I'm getting the most benefit without taking away from trading, so just trying to get there. So that's about being present at work and also in my own time. And then just removing myself from trades. And so I put here, what is your risk? So this is a really interesting concept here about, thought is like, if you're going into a trade, I suppose let's approach it from the what is your risk question. So, what is your risk when you go into a trade? If you just write your trade down on a piece of paper, the market, goes to your level, your breakout level, you buy, you put your stop where you planned and your target where your target is, then your risk is just however much your stop was, right? However, sometimes in life, other things get in the way. Your risk might be that you might be risking the fact that say you've got a bit of a fear of losing, or you fear of being wrong, or fear of what somebody else thinks. And it could be just that you've had quite a few, this isn't from my experience, so I'm trying to give you an example. But say your partner or your parents or your family or whatever have heard that you've been telling them about work and it's been going quite hard, and then you just don't want to have to tell them that you had another loser. That could be something that's actually at risk, that's not money, but that does drive your trading decisions. So it's about accepting those kind of risks, which can be external and non-monetary, and then being able to remove that in yourself from the trade, so that you're not personalizing any of this. So you're not going, well, if I make this trade wrong, I'm not going to be as good a person in my family. You're going to start to, going back to that example. Anyway, and then the other thing I want to do is compete with myself. I've noticed that as I've started to have a few more up days again, sometimes I'm competing against my P&L, but it's a little bit black and white, and I don't think all that helpful. Maybe it's better for me to compete with myself and go home and say, well, was I a better trader today than I was yesterday? And if that's the case, then to trust that the results will follow. Okay, so this top one here about these feedback loops, that's what we're going to discuss now, because these are some of the really big things I want to sort of master for next year. So I've just made this up myself from things that I've noticed, and from I suppose these loops that occur throughout me. So this first one, poor participation markets. So what I find happens in these markets, you can see patterns from the profiles really clearly. So I see these patterns, I put down some plans, and then I attempt them, right? Now, just because the market's this low participation, you get this really low signal to noise, right? So there's a lot of noise in the way the market trades. There's not a lot of clarity from the ladder. And so the trades actually have a much lower success rate than you think. So what it inevitably leads to is a lot of failure and frustration, which you then repeat, and then you find that you have more failure and frustration. Then sometimes, but not very often, you get a bit of success, and it maybe gives you false hope, and it makes you think, oh, I've actually started to work this out. And then that just results in more failure and frustration. So the key features of this dynamic is, seeing shape of the profile, the volumes as a reflection of participation. So the volumes are poor. The shape of the profiles are poor. So the way to break the circuit here is just don't trade and look to another market. However, I've actually had a bit of thought, and I think about this from time to time, and maybe I need to actually try this out. But and I suppose I need to do it from a place where I haven't been caught up in this loop. But I don't know how much I want to go into this, but say, sometimes what you'll see in these markets is you'll see, maybe you'll see a profile that looks like this. Oops, that's bad. Right? and you're going, oh, it's not really what I want to see because the market's come up to here and tested this a few times. And so you're kind of thinking generally that this market's bullish. But when the volumes are so low, if you look to the volume profile, that same profile can often look like this. And so what happened, even though the market may have come back to these highs and tested it for like 2 or 3 TPOs, and maybe it just like went one tick through and failed, well, actually, although it went up there, if there was a seller there, they could easily absorb that because under each TPO was not really reflecting very much volume. So when you see the volume profile, it was like actually there was no real buyer up there. And so even though the market kept coming back, maybe if there was a seller there, they actually wanted more volume and they were just unable to get it. And so then they've had to drive down, but it's resulted in a funny looking TPO profile. So it's almost like you're trading against the textbook under these conditions. And that's just one example. So that's maybe something that I'll look into. But first, and I'm already starting to do it now, is just to like, let's just not lose in these situations. Then the second one here, multiple scenarios. So I said earlier that one of the things I struggle with is when, you know, I don't have, or like don't have the same like sort of clarity of my idea, you know, when not everything's pointing one direction, like cool, I'm just going to look to confirm that today and then trade it or not. So when it's not that black and white, I start to struggle. So what happens here is, you know, I do some prep and I see multiple scenarios that I think are decent. All of these ones could play out today. Maybe there's 3 of them and so I'm assigning them all pretty much a third probability without actually ever physically assigning them a probability, but that's kind of the way I'm thinking about it in my head. So then I'm struggling to determine the odds for these scenarios in real time. So, you know, the market starts to trade and I'm going, oh, which one's more likely, which one's not, and I'm thinking through that, and often it takes a bit of time for that clarity to develop. But then I'm questioning them much too late or like too frequently, not really able to decide which one I want to go with, or I start to get a little bit confused and then get a bit static and pick a point and I go, okay, this is what I think now, and then I almost just like leave that, like keep that opinion for the rest of the afternoon. And then if say something changes or whatever, you know, then I'm late to realize which scenario is on, so as in like which one's playing out, and then I miss the best access. I get, oh sorry, it's meant to have another O there, I get 2 micro on the price action and take entries with low odds. So what I'm saying there is like, you know, say for example, like you've got a market that's kind of bidding like this and you want it to break this point and it gets there, you know, and you buy through these highs. Well, you know, sometimes on these kind of days, because they haven't based in a nice way, you're actually better off trying to buy the failures, but you can only do that if you're really confident that that's the trade that's occurring. And then if you buy this, you end up just getting chopped up here and then it'll go after it's destroyed your account. So that's kind of an example of that. So, you know, then what I was talking about getting micro with the price action, you know, in that example, it gets up to the level of your interest and you go, I just want to see some buying now. And you see a bit of buying and it picks up on the ladder. And then 2 seconds later, that price action stops and the market comes back. You know, that's what I'm talking about getting to micro. You're going into like price action in the wrong area or into a day where the price action isn't really the most important factor. So, yeah, so that's an example of that. So how do you break out of this loop? So recognize and accept that I've missed the edge and probably stay out and live to fight another day. That's like a totally acceptable solution in this instance. But then in terms of like what I could develop further in the future is to, another spelling mistake. Isaac, what are you doing? So there's the inability to compute intraday odds and update plans. So basically, you know, just in here, I've got to start to like go and almost like re-prep the day and ask, okay, what's going on? Maybe an hour later, go and do the same thing again. And just keep doing this and just go, okay, well, if this scenario is going to play out, the market has to break this level, I want to see these volumes, et cetera, and just keep doing this and keep reducing it until you can maybe cancel out one scenario. And then you're going, okay, cool, well, I've got 2 left and this one's starting to look more and more likely. And now you're starting to understand how you can play the trade. So that's what I need to work on. And I just need to do this with a lot of clarity so that when I actually do the trade, I'm again not thinking about the idea, I'm just thinking about the execution of the idea. And often on these days, opportunity doesn't come from, say, like the technical landscape, but what from the markets is doing intraday. And, you know, the technical landscape and understanding that is where, you know, my edge and from understanding comes into play. But the intraday stuff is obviously what I've got to develop. So there is like a bit of work to do in this one. Then this other loop that I've got here, some days after a big winner. So this kind of just happens again because the next day I just repeat this thing again. So basically what happens, say I've had a recent big winner, say it was yesterday, and then I get confidence, I can feel confident, like I'm going, okay, cool, I understood the landscape, the market did what I thought it would do. Now I think, the market's going to keep behaving like this, or maybe it reverses or whatever. And so I come into it with confidence, but I maybe don't realize it's overconfidence, because I think it's a balance. I mean, knowing, like under that circumstances, I still might be playing the odds, but maybe I'm just, Anyway, so this part's complicated, but anyway, so then often I think the edge shifts as well. So often, a market might start off and do its first move, which might come from, I don't know, maybe the market's been bidding up like this and it's been building this positioning, but the downside's a bit vulnerable. The first time it washes out, right, you have like the technical break and then you have all this trap positioning. So you have like a lot of edge from that. The second day, if you want to play a continuation, has less edge because the positioning has now been washed out. Now you're looking at people to put new positions on, so i.e. a technical continuation. However, it doesn't really have that same positioning edge from the people who were long. And so the edge then shifts into like a different area, maybe just the simple kind of like positioning and technicals way I looked at it the first day isn't going to capture the real edge of the second day. And so the edge might shift to somewhere else, or might shift to a comment that sort of like drives the next leg down. And so often you come in with a bit of confidence that you understand it really well, but you don't really recognize that the edge is maybe shifted from your specialty to somebody else's. And then you end up with this confidence taking a loser, which then sends your confidence from high to low, especially after like a couple of days of it. And then you get that frustration again, and then back over that like frustration, loss of confidence. So yeah, that's one of the things. So then obviously the key feature of this is you're having a big winner and you still feel like you've got a good understanding of the market. Now this is so hard because when you feel like you have a good understanding of the market, why wouldn't you trade it? Just because you had a winner yesterday is not a reason to not trade the next day. So this cycle I've got is not necessarily an easy one for me to solve, because I think just not trading the next day after a big winner is not a good idea. So potentially what I could do here, and I've left some question marks because I don't know the answer, but potentially I just wait for the development of my core edge again. So say, I really like when the market has positioning and technicals, then maybe I just need to wait until there's, given enough time that some positioning does develop or whatever, just so that I know that, my edge is definitely in play, or I just raise the barrier to trade the next day. Not saying I don't trade, but I just have to like the trade even more. So that's one way. I've got no idea if that's right or not. And then future developments. I need to understand this more. Is it due to my winner giving me, false sense of deeper understanding? I don't know. And then you obviously get crushed, or like your confidence crushed when you lose after that. So the real question is, what do I do to neutralize the psychological aspect, this part? And then, how do I just then keep an open mind and be objective with, the information the market's showing me? Then the fourth and final one of these is my planning goes too narrow. So this tends to happen with like news trades, etc. And so maybe it's also part of me not breaking them down right, and I just need more practice at it. But basically, I see some sort of edge in the market, I make a plan, so an idea, I go, all right, this is my idea because of these reasons. I go, Axia, okay, I want to enter this trade on, I don't know, if the market breaks this level, or if I see absorption or failure down here or whatever. And some expectations, when the market's going through the highs, I want to see good delta, good buying, like nice interaction on the ladder to pick up, volumes to pick up, etc. And then the trade happens and it goes from, say, like A to B, right, as I thought, but it does it like this, right, where I expected it to go like that, maybe. And this is kind of like, this results in like frustration and either lost or missed opportunity. And so missed opportunity could be like, I get long here and it's not really going, and then I end up just getting out down here for like a 2-tick winner when there was like 20 ticks in it or something. And so what happens here, and I'm still trying to understand this for myself, this is the one I've got the least clarity on, am I sort of planning for too much certainty? So I'm like planning as if I can see the future. Because if I can see, how I access it, what my expectations of the market are, then I'm not really leaving anything up to the market, right? If I'm saying this should go from A to B exactly like this, or near enough, then where is the chance for me to be wrong? Kind of, it's almost, yeah, I'm sort of struggling to explain this one, but yeah. Basically, it's like almost having this overconfidence that you can just understand everything about the market. Whereas maybe it's about, in terms of like how I develop this, is understanding like, okay, where is the edge in this? So say I've got a plan from A to B, what's the edge? Say it's some news. Well, okay, if I get the news, then let's just sort of stop where we planned and then enter the trade on the news or whatever, on the breakout, stop there, targets there, and it doesn't matter how we're getting there. Because in this scenario, say, that we've just made up here, the edge was the fact that, okay, something changed in the market fundamentally. The market's going to at least reprice a bit, and it's not up to me how the market reprices, it's up to all the other participants. So I just believe that if that news comes out, this market pricing will change and it should go and break whatever this level is up here. And then I just get onto the trade, and then I can just forget this part, right? Because all the edge, maybe in this instance, came from here. Other times it could be different. Other times the edge could actually be, your target might be unknown, and because of something that comes out, you're really just basing it on price action. So and you've kind of got an idea of a stop, and then you're just reading the market. I don't know, each one is different. But my point is that sometimes, if you go, okay, if I see this price action, it's definitely going to, and you try and you sort of like plan everything as if everything could be understood, then, often it'll come out not quite how you expected, and then it'll just, because it's not how you planned, you'll end up ruining the trade. So anyway, that's the basis of this thing here. So yeah, I think it's just really about like recognizing where the edge is and just making sure you capture the edge, not how you're not there to capture your expectations. So expectations help, but then at the end of the day, like if you really believe in it, I think you just capture the edge and let the market show you. Okay, so then just to summarize this really quickly. So, over the year, I developed a lot of like self-understanding that's helped me become more consistent, especially towards the sort of latter part of the year. And it's given me a bit more energy and helped me find my edge again. So not saying that I've got tons of edge, but, I'm having a lot more up days than I was. So that's a massive bonus. Then there's plenty more for me to develop and also to continue, doing and working on my good habits from this year to sort of cement them, as habits, as sort of like the way I am and part of, how I just come in and like naturally conduct my trading business. So, I just don't want any of that stuff to slip. And then there are a few negative feedback loops that we've just discussed that I want to work on to reduce sort of sources of error, frustration, etc. in my trading. Some of these loops are not completely understood, but this is part of, working through them, is starting to understand what is the core issue. It's just like someone says you need to be patient. Well, you can't just manufacture patience. You've got to understand what's causing you to be impatient and then start to sort of work around that and to grow maybe some more understanding or clarity in one area before, you end up in the situation where, actually, I don't want to take part now, and it looks like you're more patient. So it's the same kind of thing. It's just about understanding the right cause. So that's sort of, me to sign off for the year. Now I'm going to take a little bit of a break and hopefully come back nice and refreshed, ready to work on all these plans and develop this understanding again. So have a great Christmas, everybody. Happy New Year, and we'll catch up soon. All right, see you later.